Hello, my name is Jonathan Ivy, and I will be presenting on foreign investment during a pandemic. My research questions were, how do the US and her competitors perform after a pandemic? Are there winners or losers? And can we predict the post-COVID-19 performance of the best competitor? The background for my project are that in current events, COVID-19 is a major pandemic affecting the world right now. As a result, there was a March stock market crash because investors feared future performance over companies, and there was lots of uncertainty in the market. And there is high international competition between the US and her competitors, namely China. The data used for this project and model was gathered from the World Bank website, as well as the Council on Foreign Relations, which was used for pandemic data. The World Bank was used to gather investment data for the years 1981 through 2020, covering 264 different countries. Initially, the data gathered from the World Bank website was very messy. There were variables stored in both rows and columns. There were duplicate columns, there was incorrect formatting, and there were null values throughout the dataset. In order to handle this messy data, I used the melt function in order to convert the many date columns to rows, because in this dataset, the dates were recorded as columns rather than variables under a date row. I used the pivot table function to convert the variables in the column country name into columns. I used the fill-NA method to fill null values with 0 because null values represented countries which got 0 investment for that year. And I used the replace method to replace string values that were representing null values with 0 as well. My methodology and data analysis were to plot the source data and then additionally look at pandemics to see if there was any correlation, which clearly there was. I then compared competitor countries and then selected the best country based off of that initial comparison, and then ran an ETS decomposition. After that, I built a Surima X model using pandemics as an exogenous variable. The findings and results. So the United States performs the best amongst her competitors after a pandemic based on the initial visualization. The United States is used as a basis for the model development to predict future investment performance as it will yield the highest return on investment. As you can see, the United States had an inverse relationship with several countries at certain points throughout history. Namely, in 2018, the United States had an inverse relationship in yearly investment to China, as well as in 2014. This can also be observed in 2003 with the SARS pandemic and the United Kingdom. So after using the United States to build our model, based on the forecast, the United States will benefit from the COVID-19 pandemic by gaining increased foreign investment up to 4.3 times 1e to the 11, which is a bullish outlook on the net inflow market. This is a large number because the United States works in trillions of dollars. As a conclusion, investors can use this model and analysis to guide their investment decisions during seemingly uncertain times produced by pandemic events such as COVID-19. The United States seems to benefit from the negative impact that pandemics have on her competitors. Thank you very much.